Good evening, everyone. Today we are here for the video presentation of accounting for business decisions. So we two are the member in this group, and my name is Sagar Pathak, and my student ID number is BMW5001.
And it's me, Bikram Neupane, EMV5085.
So we have distinguished the parts in two separate things. So it's A, B, C. We'll go with the Bikram, and then C, D, and the conclusion is gonna be start with me. So I'm gonna submit the presentation to start the presentation to the Bikram. So he's gonna start the presentation. It's up to you, Bikram.
Thank you, Sagar. So without wasting time, I would like to go to the questions. The first question that is asked is explain to David the form of organization he can adopt for the business and briefly discuss the advantages and disadvantages of each form of organization. So any business organization which has financial resources such as money, machinery, as well as buildings are called accounting information. So this is the basic definition of accounting information. So I would like to suggest David to operate the sole proprietorship business as his assets and liabilities are limited. So to operate the big form of organization, he can choose either from the sole proprietorship or partnership. So what sole proprietorship is? It is an individually owned firms, the simplest and least costly type of entrepreneurship, making the advantages of organization. Difficulties of expansion owing to shortage of capital is the disadvantage of sole proprietorship. Sorry. A partnership is a form as two or maybe more, but does not outstrip a specifically established number of individuals who concord to provide capital and operate together in such a business with a profit-making purpose. It provides a diversification pool of skills and knowledge. Improving this efficiency management is the advantage of partnership, whereas provides a diversification pool of skills and knowledge, improving the efficiency management. So the second question is David has a very limited understanding of terms of assets and liabilities, and explain to David the three essential characteristics necessary to consider an item either as an asset or a liability. So for this I have noted some points. So the assets are the future probably economic benefit. So if there is asset, it should comply with future probably economic benefits. So assets are always controlled by the entity. It is an important essential characteristics of assets. So it is the result from prior events or transactions. So same with liabilities. The first essential characteristics of liabilities is it is a current or past obligation which obligates an entity. And the second one is it is the settle of an obligation which results through the decrease in assets, and it is a kind of form of borrowings or loan. And the third question goes like this: on the basis of information provided, David believes the business is worth $70,000. Advise him on the accuracy of his assessment. So we can simply say that the company that the David is looking for has the valuable of $70,000, which is correct. But having the loan does not mean that he cannot grow his business gradually. If he operates the business which is $70,000 worth, then he may operate his business properly and try to grow his business slowly, which can increase the worth of a business respectively. So that's all from my part, and I'd like to ask Sagar to continue further.
Thank you, Bikram, for that one. So I'm gonna start with the part D. So the first question for the part D is so I'm just noting it down with the laser. So explain to David how the account receivable and inventory should be valued on the balance sheet. If the business was to apply the correct measurement base determine the effect on profit and loss. So generally this question is talking about the profit and loss and the determination. So account receivable also linked to as a consumer receivable embody money customers own to David who finance people classified as a short-term assets or current commodity. Calculation of the inventory as well as receivable account could communicate in the record of a company because both theories are distinguishable. His statement suggests a production of retailer as a service provider does not typically sell the goods. If David, so I'm going to talk to the number E. So the question goes like this one: if David decide to buy the business, explain to him the impact of business financing decision. So this question number is trying to explain the impacts of business financing decision for the David. So the points goes like this one. They need to analyze the possible prerequisite of their business decision on the business earning, management, and financial situation that they plans to buy. The operation of every function of the business affect the overall position of the company, and the business person must identify and manage it. Decision made by the owner has a huge impact on business, and you will have to make important choice within the overall concept of the operation of the business. So they need to analyze the financial situation and manage the earnings that David wants to buy. Furthermore, I'm gonna conclude all this video presentation by the conclusion. So the conclusion is as a purpose of this research, I came to realization that perhaps the implementation of an accounting method in the business based on its size is necessary, especially under today's globalization environment. Heavy competition as well as the introduction of new information technology is a must. So this is all for the today's video presentation, and hopefully we have complied with the all of the requirements. And good evening and have a good night. See you. Bye bye.
Stay safe. Thank you.